what happened is they went into their bank, right? And they said, yeah, we'll hold the rate for you, but didn't gather any other information or anything, just like they were clients, right? And so they can do that. So for us, we need all the information up front, and then we put in for a rate hold. And the importance and the difference is because at their bank, because they didn't update all their employment information and like their debt servicing and look through all of that, they just gave a rate, right? And they just locked in a rate, but they didn't get pre-approved or they didn't find out their affordability. And so when they went to act on it, what happened is that they said, we can't approve you.
Hey, all you future Forexers out there, so glad you joined me once again on this Real Estate with Kelly podcast, dedicated to real estate professionals who they want to learn how to crush it in real estate. Today's a special episode. We're going to let you in on one of our weekly coaching sessions where we had a special guest talking with us about financing. Lisa Klee from Allegro Mortgages. You just heard her talking about an issue that came up where she had to step in and get some clients back on track. And this kind of stuff happens all the time, but you know what? It can be avoided. We're going to arm you today to help you avoid those challenges that can arise and equip you to learn how to pre-qualify your clients without having to be a licensed mortgage specialist. We're going to be chatting about the 4 pillars of finance and other kind of tricks of the trade to help you when you're out there working with potential buyers and sellers too. All right. Hey, everybody. Awesome. Good to see all y'alls. You know, sorry guys, Zoom made me re-log in. I almost said, like normally I just go into Zoom, boom, just hit the thing, start going. It made me re-log in. I couldn't remember my login. I had to go out of everything and oh my goodness. So that's why I'm late. I was like bang on time and then I wasn't. Okay, I got to go back into, I was going to do live on Facebook today too, just to kind of double dip on this since we have an amazing special guest today, Lisa Klee. I don't know where she is and how you're looking, but yeah.
Morning.
Good morning. So hopefully everybody's, yeah, there's Heather coming. Okay, I'll get that out of the way. We'll get some more people joining us as we go here. Oh, there's John. Awesome. Awesome. And we got some new people too. Awesome. Let's see here. Amid. Priyuzen, did I pronounce
Good morning. Yes.
Good morning. Thanks for joining us today.
How are you, Kelly?
Very good. Glad you're here. That's awesome.
Yeah, my pleasure.
Yeah, we have people coming in and out. It's never the same group, but it's awesome.
Hi, Kelly. Hi, Nicole.
Hey, John. We got Matt out there. Super. Okay. I'm just seeing people come in. I'm going to open up the chat. As we go, I'll try and remember to repeat this and stuff. I've got most of your emails, but just in case, I've got something for you, all of you who attend today. Actually, I got to go live now. Hang on. Okay. All right, so we're going live on Facebook. Hi, everybody in Facebook. We'll see you in a bit. You're probably just joining. So today we're going to be talking about mortgages. Today is all about mortgages. So I'm super excited about this because it's really important to understand the numbers, understand how to have those proper conversations with people, and really just bring reality to the situation and bring calm to the situation. But at the same time, before you start putting people in your car and driving them around all over the place and spending all this time and money on that, it's a really good idea to learn at least a skill set of pre-qualification. And so we're going to talk about that. I'm gonna yap a little bit, Lisa, and then I'm gonna bring you in and we're gonna do just a full-on Q&A. But I'll get you thinking about it now. We'll look. I'd love you to start with something to talk about a little bit about the banks, what's going on, what you see happening, over the next few months, and how we can adjust for that. So I'll leave that with you so you can think a little bit while I'm talking about the other things. So yeah, anybody who's with us today, if you just plug in your email into the chat, that'll go into a thing that I can record and I will send this out to you. So far, this is not available anywhere. This is something I created a while ago, and I'm saving it for a specific part of the course in the Forex Formula Quick Commission Blueprint course. I'm saving this for a specific pillar in the course that we're going to introduce this tool. And so no one's even seen it. You're the first to see this, and you're going to be the first to get it. So I've got it all prepared. I'm going to email it to you. Just plug in your email and I'll send it to you. Anybody on Facebook Live, just send me a DM and I will send this out to you as well. Okay. Basically, it's a mini, call it a mini course, if you will, on just pre-qualification, just a step-by-step guide on how that works. And I've even given you a bit of a tool. It's I call it a client worksheet. And it goes over basically the 4 pillars of finance. And if you understand those 4 pillars really, really well, and you understand that basically you just need 3 out of 4 to get some sort of financing. You can get 2 out of 4, but Lisa will tell you it's a little tougher financing, but 3 out of 4 is kind of optimum. Nobody's 100% perfect every single time because something else might be going on, or there might be another issue. So I'm going to talk about them real quick and go over that because I think this is super important information. And if you remember this alone, this is really going to help you when you're sitting down with clients. So real quick, I'm going to just put a pin in that. And I'm going to talk about sitting down with clients. Locking in buyers, working with buyers is a key element today. The gestation period between starting with somebody to them actually doing something is probably going to be a little bit longer. Some people are like ready to go right now, and that's awesome. But we can't build our business on the now people. We've got to think about the soon and the later people, right? And we got to nurture them along and eventually become nows. And when they become a now, hopefully they're working with you. So how do you get that to happen and ensure that that happens, right? Part of that is just being a professional, being someone that stands out, that actually is in their corner, that's working for them, for their best interest, right? So when you sit down with somebody, we should be talking about buyer's agent contracts. We should be talking about the process, right? And give them a feel about the journey a little bit, right? When you're flying in the airplane and the airline pilot goes, okay, guys, we're looking for 5 hours. We're going to be a 5-hour flight. Looks like the temperature in Arizona is blah, 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 blah. But I will say, about halfway through, we're probably going to hit a little bit of turbulence. It's going to be a little bit bumpy. There's some air currents going out there. If they tell you about that in advance, it doesn't feel so scary, right? Now, when you hit the turbulence, you go, oh yeah, he already talked about that, right? It's not freaky because he talked about the turbulence coming up. So if we can do that in our discussions with people, and part of it is honestly prepping them so that, because when you refer somebody to a mortgage broker or a mortgage lender or somebody that you're working with, you want to set that up properly, right? There's a process involved. And it's super frustrating for the mortgage brokers. Lisa will tell you this, we'll get into this in a bit, but it's super frustrating for them too when the banks change the game or they ask for more information, and it's just super frustrating. So just get them ready for that. The mortgage broker's not an idiot. They're not a jerk. They're dealing with underwriters that are asking for stuff, and they're dreaming up new stuff all the time. And we just have to be compliant. They hold the money that we want to get. So, we're going to have to play the game, and it's going to be frustrating sometimes. So just, prepare people for that sometimes. It's even more so right now because of the rates increasing and there's uncertainty on things, and there's just a little bit of that. So we have to bring calm to that, right? So anyway, mortgage qualification. So this is a 9-page document that I'm going to send out to you guys. And it basically talks about the 4 pillars of financing. So these are the 4 pillars you need to understand, okay? Credit history or character. That's one of the pillars that the lenders are going to be looking at. Credit history or character. The other thing they're going to be looking at is income stability. So how is it derived? How is it coming in? How much is it? What kind of job is it? Right? Is it a business for self quasi kind of job? Is it a income plus bonuses that happen because of a certain type of structure in a job? Those kind of things are super important to know. There's truckers, as an example, who are employees, and some truckers are actually business for self people. Those are 2 different profiles, right? So how is their income derived? How long have they been at the job? If they just got a raise recently, are they still on probation? Some jobs have a year probation. Some jobs have 3 months probation, right? So these are all really important things. If they've been in the job over a year, have they moved jobs recently? Moved like they're making money in this exact same industry, doing the exact same thing, but they just moved. Well, that's okay. Or they were doing one thing and now they're doing a whole different thing, but it's new. Well, that's totally different. They're in a new industry now. They're trying something different. There's an element of risk there in the eyes of the lender. So these are all the things you want to know, right? How do you work? Ask a few questions about that. How does your income come in? Is it salary? Is it hourly based? Can we guarantee it's all full-time? What kind of job letter are they going to give you? Are they going to explain things? Is there a bonus structure involved? Well, how does that work? Then we're probably going to need 2 or 3 years average on that. You might have had a fantastic year this year, but they're going to probably just take the average of the last 2 to 3 years if it's a bonus type structure. So these are kind of things to consider when you're getting into these conversations, right? So income stability is a big one. How are they going to pay it back, right? Next one is down payment. Some people have less money down. Some people have a lot more money down, and these affect the approval process and how they're going to be looked at and their profile within the lender, right? A person like Lisa will take these 3 pillars and basically go, okay, we need to find a lender that's going to fit this profile that based on the pillars that we're looking at, right? Maybe they have tougher credit, but they have super good income and they have lots of money down. Well, we're looking good. We could probably make this happen still. They might have had a blip in the past, right? Maybe they have fantastic credit, fantastic income stability, but low down payment, right? So that's where the pillars come in and this worksheet comes in. So you can sit down with people, between 1 and 10. What is it? They got fantastic credit. They're over 680. I've seen people, my brother, when we pulled his credit a few years ago, I don't know when it was, he had the highest credit rating I'd ever seen of any client. It was my brother. I'm so ticked off at him. But anyway, and then, income stability. How does that work? Are they between a 1 and 10? How does it look? Some people are business for self, right? We're going to hit them a little bit harder because they may claim less money in their income, because a lot of business people don't want to pay a lot of taxes. They want to keep them, or they want to keep the money in their company and they just pay themselves enough to survive and just kind of pay the bills. But the company kind of covers all the other major expenses. So they'll show less money. Well, the lender's going to look at that, and it might be a concern. It might be a different way of creating a profile for that person. And then the next thing that's really important. So that's all about the people, right? Those are the 3 pillars about the people. But the 4th one's the property. And that's the security of this loan, right? That's the security. So the property is super important. If it's a mobile home sitting on 7 acres, that's going to be a little tougher property to finance, right? If it's a property that's located with a population of 1,500 people out of town, right? That property is going to be a little bit tougher to finance, right? Because there's less turnover of sales. The banks look at that. Under 8,000 people, I think it is. Lisa will talk more about that. And is it the type of product that, it's just cookie cutter, like where there's lots of sales happening. There's a lot of turnover going on. There's lots of buyers in there. They love those types of properties, right? If it's, so the type of property that's the security on the property, past grow ups or just recent grow ups, things like that. Okay. So anyway, that's a little bit about the 4 pillars of finance, and I get deeper into it in here. And then I do a few scenarios, some examples of different types of people and how the bank would look at them and how we would mark them in categories. So I'll get this out to you guys, but I wanted to quickly talk about the 4 pillars for about 15 minutes. And then I wanted to just after that, open it up so that we can talk and get some insights from Lisa. So Lisa, let's open the floor to you now.
Sounds great. Thanks so much for having me.
Yeah. I'm sorry, I didn't say much about you. Okay, sorry. I got to do my job here. Lisa Klee, Allegro Mortgages. She's amazing. I've been working with her for about 6 years. And she's done a lot of stuff for us personally, as well. And we also refer a lot of clients to her too, just because she does a great job. She cares about the people she deals with, and she walks alongside them. Some people are not today. Some people are sooner or laters, and she sticks with them and works them on a plan. And I really appreciate that as a professional. And I don't take money when I refer anybody to anybody, because I don't believe in that. But I do ask one thing from the people that I refer business to, and that is do a great job. And if you can, make me look good too, right? That's what we want to do, guys. And we want to edify each other too, right? So when I edify Lisa, she's got to live up to it, and she knows that. And when she edifies us or refers people back to us, if that happens, we got to live up to that too, right? And so anyway, a little bit about that, but Lisa's fantastic. And our mentalities are aligned on how we deal with people and everything. And so I love that. So anyway, I wanted to give you that, Lisa.
Thank you. I appreciate that. Thanks for the kind words. Yeah, to expand on what you said there, we honestly look at it as what's called a transfer of trust. And so we know how important it is when you're referring clients to us, like you said, to live up to expectations of, the same mentality of treating them, as family, friends. And at the end of the day, all we care about is doing what's right for them. And so we are going to do the work so that when they walk out the door, whatever option we're giving them, we know that no matter what, it's never going to come back, that there could have been a better option. So back to your comment on, really looking at, all the different aspects, what we say, people talk about, what's the best rate out there? What's the best option for me? And we say, whoa, hold on a second. I totally appreciate that you want quick answers and you're wanting to act quickly, especially with the market, how it has been in the past couple of years. But we really need to understand who you are, what your goals are, what makes you tick, and then we can then come up with a solution for you. So it's kind of the age-old cart before the horse. We want to make sure that we understand all of those things before we give the solutions, because the solutions are going to be tailored to those answers that clients give us. Pre-approvals, absolutely. At the end of the day, like, what are you looking at? What can you afford right now? Especially, what is the mortgage payment? We have so many people that they're just like, qualify me for the maximum that you can give me. And then we're like, okay, so high level, the maximum is this, and here's what the payments are going to be, $3,500 a month. And they're like, what? Like, we're not quite caught up to the rates, how they've increased over the last little bit here. So they're still thinking, clients are still thinking about, a $500,000 mortgage and what the payment would have been when we were looking at, 2% rates. And yes, they hear it and they know the rates are increased, but let's really drill down to what the monthly payment is. So again, it's just because somebody can afford something doesn't mean that they want to. So that's also a huge thing before we're giving them back, with an affordability to the realtors, making sure that we've gone through every single detail so that there's no question left where we go through all the work of putting an offer in on something. And then they're like, wait a minute, what's the payment? That's just our worst nightmare, as well as yours, right? Because then we just really want to get guesswork out of it.
Absolutely. Yeah. So right now, obviously, everything's rate sensitive, right? We've talked about this quite a bit in our coaching sessions over the past few weeks. And to me, I look at it and go, well, people were qualified based on a payment amount, right? Like it's your income derives a certain payment amount, right? And there's rules for that, right? Around that 30% of your income can be devoted to payments and some other costs of that. We can expand on that in a bit. And then there's the 42-ish thing, depending on CMHC guidelines, of total debt and payments going towards those things. Okay, so we've got gross debt service ratio and total debt service ratio that we use for qualification. And I'll let you expand on that in a second. But in my mind, like, if someone's qualified for a $2,000 a month payment, just use $2,000 for now. Even if the rates go up, it's still a $2,000 payment. Like, it's not like they're having to pay more money necessarily. There are some people that maybe were on some floatings and there's going to be some trigger rate things going on with them, potentially, me being one of them. But as far as qualifications go for purchasing right now, right? So if it was, a $750,000 townhome a little while ago, and now it's a $550,000 townhome or a $600,000 townhome. It doesn't matter. It's still $2,000 a month is what you're qualified for. So your purchase power may have changed slightly, but the prices have dropped considerably right now. We might still be close or in line.
Absolutely. Yeah. And that's what we're finding. Like, we have lists and lists and lists of people that were pre-qualified previously, but they just couldn't get in, right? Like it was just too aggressive of a market for our clients to be able to, because they needed subject to financing and they needed, mom and dad to be on board or whatever the case was in their situation. And they became discouraged and they went off and were like, what, it's not the right time, so they kind of went quiet and we followed up and like, hey, you just, well, let's readjust, let's take a look at this. And they're like, no, I'm done. Like, it's just too aggressive. Well, now what we're seeing is those people coming out of the woodworks and we're having to come and grab them and say, hey, come and take a look at this again, because they're like, now their fear is interest rates. So now, before it was market, now it's interest rates. So we're doing our part to grab those clients and say, hey, let's actually take a look at it, because you're right. And you can put subject to financing. So then you can go through that process. It's a much better process because they can actually take the time to understand it. And that's where fear gets in the way for a lot of clients. And that's where we're doing our part to make sure that we're giving them that full understanding and regrouping. So you're exactly right. We're seeing more and more of our clients going out and buying now, but it just takes that work. But we're willing to do that because, one, we enjoy that process a lot better. Because we really get to know our clients, and it's not like, I have, subject removal in 5 seconds, so go get your approval tomorrow.
Totally. That's the thing. Like, people should actually feel empowered right now, right? And because it's a buyer's market, and this is where, this is what they've been waiting for.
Yeah.
But it couldn't be 100% perfect. It couldn't stay at 2%, and prices come down 150 grand, and they're not competing for offers, and trying to figure out what they're going to have to pay. Like, I remember those conversations. It was not fun having conversations with buyers and going, I don't know, is it going to be 40 grand over list price or 80 grand over list price? I'm not sure. Maybe it's 100. Like, that is a horrible conversation to have with a pre-approved buyer who has a defined amount that they can qualify for. That is really hard. It takes them out of the game. And if they don't win that one, next week the prices are up even higher, 10, 20%, 15%, 5%, and they're out. Right? So what you're saying now is you're going back to those people, all of you realtors, all of you who had some people in the past over the last year and a half, 2 years, get back into that database and call those people up and get them together with people like Lisa and go, okay, let's figure it out now. Where are you at now? Where's the reality of it all? And let's see if there's something out there for you now. And guess what?
Clients need hand holding, like they need that reassurance, right? Like they're like, I don't want to talk to anybody. No, just there's no pressure. Like, just sit down, let's just have a conversation. And once we sit in front of them or get to talk to them, then it's amazing. A switch just flips and they're like, oh, and we just create that doubt, right? Like, maybe we don't know, and maybe we do need to find this out. So it's really helpful.
Yeah, no, super good. So there's business right there waiting for you guys right now. There's business there. And sometimes it's about the shift. Sometimes it's about the move. Sometimes it's about a shift of equity to make the next move. And people do get hung up on sale price, right? For sure, because they were looking at a chunk of money there, and that chunk of money may not be there now. So they're like, maybe I won't make a move. That might be the right answer. That might be the right conclusion for some of these people, right? Because they're moving equity. But at the end of the day, someone said this recently, and I thought, it's awesome. You date the rate, right? And you marry the property, right? Because rates change all the time. The rate is just borrowing of money from the banks right now is all about leverage, right? It's just about leverage. We're in an area where, and it depends on where you are too. I mean, I'll qualify that, but where most of us are operating right now, we're in an area where we know at some point the market's going to go again. It was there. That means it'll go there again for sure. That's how it works. It's how it's worked for the last 45, 50 years. So the market was at a certain level, right? Call it 150 grand more in a lot of cases, right? 150, 200 grand more in a lot of cases. So if you can buy something that's not at that price right now, leveraging a 5.5% rate or whatever it is at the moment, then you can at least feel confident that 200 grand is still there to get at some point. It's a weird way of thinking of it. It almost sounds salesy, but we know it's there just from and I've never believed it every time. I remember I never believed condos would be over 100 grand. I remember that 25 years ago when I got into real estate, right? There's $1 million condos out there now, right? And I remember selling my first 10-acre property and it was 250 grand. And I thought I was the big man. 250 grand. I'm getting paid, man. And I was so excited about that. And I never could imagine that property being $1.5 million, right? So it does happen eventually. So real estate, you're always going to do fine as long as you don't sell at the wrong time. Or if you are selling at a time where maybe the equity is shrunk a little bit, make sure the next buy is a win, right? Like that, what you're going into, there has to be potentially a better win off that than what you're selling. If that's not the case, then stay where you are. Yes. Right. So anyway, let's open the floor up and see if anybody's got any specific questions about financing that they want to ask Lisa right now. There's got to be some burning questions.
Well, while you're doing that, Kelly, I was just thinking about something that I wanted to share about how we design things to take that guesswork out. Like we were talking about fear and information. What we do with our clients is like if they're transferring, so moving up or whatnot, and they have that fear. Right now, we're seeing a lot of, well, I need subject to sale, right? So what we're doing is we're saying, okay, if you were to purchase this place at this price, this is how much cash you're going to need. So this is how much you need to sell your house for, and then this is how much proceeds you're going to have. And we're taking like, okay, but you need to pay your truck off, you need to do this, and we're showing them exactly what the numbers look like. So every email that we send out, we just sent one out this morning. If you were to buy this house, this is how much the purchase price would be. This is how much your affordability is based on every single document that we've already received. So that again, we're not just guessing, we make sure we have everything. And people, that's the hardest part of our job, is just give me the answer. Like, I don't want to give you everything under the sun because that's what we require. But they're thankful later, because honestly, I can say in the entire time we've been brokering, we've never once had it where our affordability didn't stick.
Yeah.
Because we are sure, like we are absolutely sure. And with my experience being in the banks for many years, like we know all the ins and outs. So with that, it's again, right in front of them. I know how much I need to sell my house for. I know what my price range is. So now I can go in and make an educated decision.
Yeah, that's right. See, I think if there's confusion, any kind of confusion in any kind of way, then fear will always overrule and inaction will occur, right? People will not do something if there's any kind of fear involved. And so if we can bring clarity and calm and understanding and reality to things, and the reality is, always qualify this when you're talking to people, because it actually breeds more trust, and it should be true. You know what, Bob and Mary, right? I'd love to get together with you, because getting together with people is important. People get together with them face to face, toe to toe, knee to knee, right? If you can, as much as possible. It's important to get together with people, get an understanding, do this kind of work with them, right? Have a conversation. You don't need to know all those specific details. You just need to ask the questions to get a handle on where they're going to be in the pillars, right? So once you've done that, then you can kind of say, you know what, the conclusion might be not to do something right now. The conclusion might be this is not the right time for you, or the conclusion might be it's not the right time to sell. But you know what? It might be a really smart time to do something right now for you, given your situation. But I need to sit down with you and figure that out. Is that self-serving? Not at all, right? That's you being a consultant saying, I'm willing to spend the time with you, and I know that I might not get paid right away. Right? But we're going to do what's in your best interest. But we have to have time to discover that and bring clarity to the situation. So at least you know what you're saying no to, and you know what you're saying yes to. right? And that's a key element to serving people well. And that's something we all need to get good at, and we need to communicate that. And that's going to elevate us in the real estate industry. Okay, Lisa, what's going on? What's happening? What's coming up?
Oh, that's a loaded question.
Yeah.
Yeah, we definitely obviously have seen some wild things going on in the interest rate in the mortgage world. You know, I've been in finance for 20 years. And so, you know, we used to back in the day be able to say, oh, you know what? All indicators are saying that this is going to happen. Gone are those days. You know, I just stopped talking about like specifics for a while because there didn't really seem to be any reasonability behind it, right? Like, again, things were starting to come down. So why is interest rates continuing to go up? Like, you know, and we've got to dig really deep, and I call it like an onion. Like, you got to remove all these layers of what's going on economically to be able to fully understand it. And I'm not going to go into too much detail for a couple of reasons. One, because we need like a huge amount of time to really understand it. But what I will say is this is, you know, they are projecting right now that interest rates are going to go up again here by the end of 2022 by about 0.75%. Again, that's what they're projecting. But then the good news is that they're talking about, you know, in 2023, interest rates starting to adjust again. Right now we're attacking inflation. They're wanting everybody to stop spending. And so, you know, but it's happening. Like, we are seeing some changes as you guys are experiencing. So that's kind of what they're projecting out for interest rates. Again, I can't really speak specifically because, again, it's, you know, we say one thing and I'm hesitant to do that anymore because things are changing really fast as we experienced last year. But I do hope that gives some hope on that. It has to be honest, like we're all feeling it, right? And so something has to give at the end of the day going into 2023. You know, they were talking about potentially a soft recession. Now they're saying it may be a bit of a harder recession that way. So we're going to need some re-stimulation, right? People are going to feel hopeless. They're not going to want to go out and do anything, and economically that's really going to be difficult. So that's kind of the reasoning why they're projecting that we're going to see a softening of interest rates. Do I think that's going to mean a drastic drop like we did? No, it's not. I personally do not think it's going to go back down to what it was, because they really never should have been there. Like, we never should have seen sub 1% rates, right? Again, that doesn't make sense. And so, but do I think that they're going to soften? Yes. Are we actually at a high interest rate right now? No. Like, if you've been in as long as I have, like, these are not high interest rates, right? And so again, I don't want to give hope that the interest rates will be back down to sub 1%. But I definitely think they're going to do something to stimulate. So that's kind of interest rate wise. Again, we were seeing in the last few months, you guys may have heard this, that we were qualifying for more based on variable rates. So there was a time for about 3 months where we were actually qualifying people for variable rates because your contract rate plus 2%. So they were qualifying for a little bit more if we were to apply through variable rates. That has leveled out now, just so that you know. So we're qualifying about the same with fixed or variable. So it really boils down to what is best for them. When we qualified them for variable, just to clarify, we would then recommend that if they were fixed rate clients, to then right away lock into a fixed rate. You know, questions about fixed versus variable, we get that all the time. Should I be locking in? We've had this for the past year. And again, I cannot say whether people should or shouldn't until we sit down and have a really lengthy conversation about their plans for the future, as well as what specifically makes sense for them. What stage of life are you in? How much of a fallback do you have? If interest rates were to increase by another 1%, what would that do to your household? You know, every lifestyles are so different. So again, that's not an easy question to answer, and it's a very specific to each situation. But again, we're always available to have those conversations with clients. But yeah, we do not make like blanket statements on there. It goes back to Kelly, what you said at the very beginning. Like we don't want to be, oh yeah, we can totally get that done for you, and then disappoint everybody. We're very realistic and make sure that what we're saying is very factual and specific to situations.
Yeah.
So yeah, debt ratios. I mean, yeah, there's a lot of things to talk about. We talk about rates, great, but that's a small portion, really, when you think about it. Again, how much income towards debt payments do you have? There is requirements. We always start at the top with the banks and credit unions and work our way through to get the best rates, but maybe there's a business decision that makes more sense for you to use a B lender, for example, a little bit of a higher interest rate, but there's reasons for it, like this property, what is the end goal with this property and with you financially? So again, long conversations with clients to figure out what's in their best interest. Lifestyle is a really big thing. What is this going to do to your lifestyle, and are you okay with that? So we take the guesswork out, like I said before.
Yeah, and looking at it in a three-dimensional way, as opposed to there's some cheap money mortgages out there, but if someone's not thinking of staying there for the full term, the 3 to 5 years, like the best deal and rate isn't always the best deal when it's a $26,000 mortgage penalty. Right?
Absolutely. Cashback is a really big thing on that too. I worked for one of the big banks and we used to do cashback mortgages all the time. And I was like, oh, this is fantastic. Like they get this cash back. Yeah. Until partway through the term, they break their term and now they're paying the interest rate differential. So the difference between when you first got your mortgage and the rate at the time, as well as they were paying that cash back. So they couldn't get out of their house because it was, like you said, $20,000, $30,000 penalty. So again, there's a long conversations with our clients about if you choose this type of mortgage, this is the long-term impact for you.
Yeah. So you got to talk about everything. They got everything, and I mean, really, it's just, you can't replace experience, right? Like you do enough things, you have enough things happen, and then you start to try and remember those things that happened, and then you can help consult people as you go and all that kind of stuff. But working with someone on the other end that is dealing with an important aspect of the process, that person needs to be in your corner and they need to be advising people properly, not just slamming people into mortgages and then moving on. And then people get surprised later. That's going to reflect on you as a professional. And so super important to have the right people in your corner and make sure you're advising people properly so that they have all the information when they're making a decision. In good or bad markets, even in the crazy times. I mean, how many times did we have conversations with you and, we're trying to get people just about like we're getting all the strata stuff. We're doing inspections and everything before offer day, right? To try and it was crazy. Now we have this luxury of time with people. And I just saw a listing that I thought was priced pretty good. Yesterday, I asked them about it. Is it still available? It had been on the market 3 months and they ended up taking about 150 grand under their already low list price. Like crazy things are happening right now. And I'm not suggesting let's go hammer on every single seller because that's not going to work well either. I mean, there's going to come a place. But here's the other thing, guys. Always remember this, every one of you. And I think we're all going to feel it at some point. There's going to be a slight correction. There's probably going to be another jump. Right. And everybody's hanging on for the jump. They're going, I don't know if I should do anything right now. It's probably going to jump again. And wrong answer. Okay. So if someone's locked in on a mortgage right now or on a rate, if they haven't got locked in, then, oh my goodness, that's one thing we got to be telling people to do wherever the rate is. Doesn't matter where it is. Quit getting hung up on it. Just get locked in if you're looking to maybe do something. Because if prices come down and they get in line with where you can buy and it meets your payments and your budget and qualifications and all that kind of stuff, then pull the trigger and do it because you're going to win at some point, right? But if you're out of fear, not even getting locked in because, it's too high, get locked in because guess what? It's going to be higher, right? So that's huge, like instilling that sense of urgency into people so that they can take advantage of opportunity when something pops up, right? And then that's our job.
If that rate is locked in, then if rates go down, great.
Yeah,
But at least you know they're not going to go up.
exactly. So wherever it is, and if they're thinking of maybe doing something, just say, well, get locked in. Don't wait for it to dip back down again, because it's going to keep going. If it goes back down, you get the benefit. So just lock in. And how long can we normally lock in, Lisa?
90 to 120 days, depending on the lender.
Yeah. So 90 to 120 days. That's a long time to be locked in, right? There's a gestation period from finding the place, right? Going through all the stuff. So call it 2 weeks, right? So you got to be thinking about that and thinking about timelines when you're working with people. But don't hesitate on that. Like that's not a reason not to do something, right? It's a reason to do something. Get locked in. And then if rates go down, great. So the other thing, when rates go down again and they start to settle and confidence starts to happen again and starts to occur again, let's think about this. How many people are not doing something right now?
Mm-hmm.
Not even locking in, not even doing, or locked in, but then didn't pull trigger because they're hoping for something better, whatever, or they didn't have a realtor that was actively trying to look for solutions for them, or they didn't have a mortgage broker actively consulting with them and getting them ready to get ready, right? So if that wasn't going on, what's going to happen is all of a sudden, all these people, pent up demand is going to happen. And there's going to be all these people coming into the market. And what's going to happen? Competition again. Because everybody's going to get used to it. They're going to get used to it. We got used to the 2%. We're going to get used to the 5%. We're going to get used to the 4.5%. It's going to become the norm, right? Because as human beings, what do? We get used to things. It's how we operate, right? We got used to COVID. We got used to, that's what happens, right? We go through the shock and then eventually we get used to things. That's human nature. It's what we do. When that starts happening, pent-up demand is going to kick in. So there's a few things we want to talk about on that, right? As a professional, yeah, maybe you're not doing as much deals right now, but how many seeds are you planting? How many people are you meeting with? How many people are you setting up right now? How many people are you building trust with right now? How many people are you figuring out how to meet and consult with and get them into the, I call it the hopper, right? Just keep getting people into the hopper and eventually they work their way out and they do something. But the more people you have in the hopper, the more people you have kind of plunking out, getting ready to do something. Our job is to consult with and meet with and get to know and help and gain trust with as many people as possible, because they are going to turn on at some point. And this is where the rubber meets the road. There's going to be a lot of agents that are going to be strung out. They're going to be getting out of the business. They're going to go back to working in jobs and they're going to be, paying all their attention on that. Life's going to kick in. There's going to be a lot of them. There's a ton in the course right now that I think are going to come out and they're going to go through all their learning stuff. And then when things turn on again, it's going to be perfect timing for them, but they're going to be replacing other people that are going out. Right. So there's opportunity for the people that are actually doing the work right now. And you may not be doing the work, getting all the results immediately, but if you're doing the work, you're building that base to be able to take advantage when things kick in again. I really believe that. Been through it enough. Anything else about financing?
One thing I was going to mention is we were talking about pre-approvals and rate holds. So a couple things, just what pre-approval versus affordability. So just wanted to mention that quickly. When we talk about pre-approvals, it is always just an affordability. So gone are the days where you can actually pre-approve someone where they can go in subject free based on a certain amount. But we do, like I said, take the guesswork out of their budget. So we're saying this is your budget. Once we get the home, like an accepted offer on a home, then we go in for final approval, and it just happens a lot faster because we're not gathering the information and going through and picking through all the different things that we need to deal with from a financial 4-pillar basis. So again, you hear the two things. I say affordability because I'm very cautious on that because we're super transparent and we don't want people to believe that they can go in with offers and it's untouchable. Again, we still have to work through the process of approving the home. So that's one thing on that. The other thing is rate holds. So the benefit of using a broker versus the bank side of things is that if you haven't gone through and handed all of your paperwork into the bank, bank, for example, then you only have a rate hold at that one place, right? And so for us, because we do all of that work ahead of time as well, then we want to make sure that whoever we rate hold is going to be your best lender based on your situation, right? So again, rate holds aren't just rate hold in the whole mortgage atmosphere. It's rate hold with that lender. So making sure that those clients, if they have a rate hold, that they've given all of their information. And again, even if it is at a bank, have they actually gathered everything and made sure that they can even do it? Because what if that one lender is like, oh no, you don't fit inside our lender box, so therefore we can't approve you. And we actually had that in the last 6 months where they went to their bank, got a rate hold, rates went up 1%. And then when they went and found something, they declined them. So now they had to actually have a 1% increase in interest rate. And when we got it on our desk because rates had moved. Right. So just something to mention as well, make sure that if somebody says, yeah, I have a rate hold, okay, have you actually provided all your information and made sure that when we find something, they will definitely approve it. Again, make sure we're doing the work ahead of time so there's no surprises.
Yeah. Yeah. That is more common than you know. It is unbelievable right now. I think I did a little intro video on TikTok, and I might have shared it, but it was one thing I said on that was, have you ever had a client say to them, oh yeah, I'm all pre-approved, and then they weren't, or the bank changed the game, or something like that happened? That happens a lot. And we do know, like the first question, I'll just, you guys, you got to ask this. If someone says they're pre-approved, okay, great. So have you locked down on a rate then? Oh no, well, I just talked to my banker and they said, oh yeah, we can get you a mortgage. Like that is not a pre-approval. That's called a conversation that means nothing. That is not a pre-approval. But if they say, yeah, no, I gave them all my tax information. I actually had to give them a job letter. I couldn't believe it. I'm not even buying yet. And I had to give them pay stubs and T4s and showing my bank account, and then they got my profile in there. Okay, that is most likely a pre-approval. But did you lock down on a rate? Right? Did you lock down on a rate? Some banks won't do it. Right? They won't do it. It's not worth the work for them. They're not reserving money for anybody. They're not doing that. Right? Some banks won't do it. So you got to remember that. That's a tough one, because if the rates bump, they're out of the game based on that amount. So what Lisa's talking about is we're actually doing the work. We're actually getting a lender to commit to a rate and stay on that for you during that time that you're hunting. But now you got to be hunting, right? It's so, yeah. Is it a full pre-approval? Because what's the last thing that needs to be approved is the property, right? A full pre-approval is the first 3 pillars are dealt with, right? They're solid on the income. They're solid on the stability of that, how it all works, how it operates, the structures of it, because there's all different things going on in income now. Lots of different jobs and how people are making money and all that stuff. I mean, I was talking to Tyler yesterday. Can I say this, Tyler, about your lady? Okay. She's an influencer on, I was blown away by this. I think this is so awesome. She is a belly dancer, and she can I say she makes 6 figures, and she's got over 30K followers. And I mean, what a financing nightmare. But she probably can prove it. But she gets flown all over the world to do belly dancing and teach belly dancing to people. That's what she does. Isn't that amazing? I think that's fantastic. But what a wacky kind of file. Imagine putting that down on a mortgage application, right? But it's awesome.
I'd like to point out that I wasn't a realtor when we got our mortgage, and I was an actor at the time, a professional actor. So our mortgage broker they worked very hard. Let's put it that way. Yeah. We couldn't prove a consistent income, although we made a pretty good income for both of us. But artists, you're self-employed. I mean, we're just financial nightmares. But they did work hard for us, and we did get what we wanted. But the banks they didn't even talk to us. I mean, they threw embarrassing figures out. Oh, you can borrow $100,000.
Yeah.
What are we going to do with 100 grand?
That's not going to do it.
But yeah, it was talking to a broker made a huge difference because they actually can hear your story. And I feel like they do a little bit more detective work than the average bank.
Yeah.
That's a great point, Tyler, because really that's why I love my job. And I honestly can say that I love my job because there's never a no. It's you need to do this, this, and this, or this is your solution and this is what it's going to look like. Like, honestly, you guys, it's so fun because sometimes it's like that credit score is just a little bit too low. Okay, but you've been utilizing over 70% of your limit on your credit card. That's what's keeping it low. You're doing everything right. You're making all your payments, everything. They make that one change and 3 months later, boom, they're in. You know, and how exciting to be part of that process. And so, yeah, it's never a no. It's just, how do we got to look at this? How are we mapping it out? We work as a team because we believe that more brains than just mine. Absolutely. You know, experience, all that stuff comes into play. But yeah, that's a great story.
I love that. There's never a no. There's never a no, really. There's just a when. And what do we got to do to get there? Right. You know, we have speed bumps along the road. They're not walls that we're bumping into, right? They're just speed bumps. We got to just figure out how to get over them. And sometimes time, it could be just time that you need. But if you just kind of go, well, you're not doing it now, so see ya, right? And those people are going to get picked up by someone else, right? Keep them on the bus, right? Keep them on the bus, and eventually they're going to, you know, we're going to get them to the destination. But so that's the key, right? And we got to love on people. We got to care about them. We got to, you know, there's some people that are just a mess financially. They may not be 2-3 years, right? But I've worked with some people, Lisa and I have worked with some people. They still probably, actually, there's one couple I'm thinking of right now. They still haven't bought a house for me. They just can't do it. They're still renting. Can't seem to get stuff together. Another life thing happens. You know, it's just, some people just, you know, it's just, they're not able to do it. But you know what? Because I took the time with them and we did work on solutions and we did give them things to do and we did check in on them and we did walk alongside them, they've referred 3 different people to me that have bought and sold real estate, right? They've never done a deal with us, but we've gotten 3 deals from just caring about these people, right? And because who else are they going to refer? Like the person people bump into people all the time and talk about real estate. Right. So that's a whole other aspect that we're not even talking about, but that is a key element to success in real estate that you can't even like, it's hard to measure. Right. But you can measure how many people you meet with. You can measure how many leads you get in the sense of, you know, people interested in something that maybe you could figure out how to help. Right. You can measure that. You can mark that down. You can add those up. You can measure that. Right. Eventually, you'll start measuring the deals and the commission checks and all that kind of stuff. Those are lag measures, but the lead measures are the amount of people that you're touching on a daily basis to try and figure out how to help, right? You can measure that. That's what you need to be measuring, right?
Can I ask a quick question? Sorry.
Yeah, please.
Lisa, you mentioned rate hold versus locking in a rate. Can you clarify what the key differences are, please?
It's exactly the same, just 2 different ways of explaining it. No, great question. No, yeah, you can refer to it as a rate lock, rate hold. It's just making sure that rate, you have a start date and an end date as to when it's held for you, right? So that's part of our process in it. When we qualify clients, especially if they're fixed rate clients, we're saying, okay, let's just take a look at this. And it's super important right now because the rate's going up.
So if they held or locked in a rate, I was under the impression that it wouldn't change, but I don't know if I misheard. You were saying that it did change for that 1%?
Well, so what happened is they went into their bank, right? And they said, yeah, we'll hold the rate for you, but didn't gather any other information or anything, just like they were clients, right? And so they can do that. So for us, we need all the information up front, and then we put in for a rate hold. And the importance and the difference is because at their bank, because they didn't update all their employment information and like their debt servicing and look through all of that, they just gave a rate right? And they just locked in a rate, but they didn't get pre-approved or they didn't find out their affordability. And so when they went to act on it, what happened is that they said, we can't approve you. And so, because again, they didn't tick all the boxes of that specific lender, right? And when I was in the bank, like I could only offer what I could offer at whatever institution I was working at. And so for us, because we're, like I said before, we're doing that work ahead of time to make sure that wherever we are holding a rate, is we know that they tick all the boxes, right? We picked up the phone and we've said, hey, here's our high level. This is who the clients are. This is their employment history. This is where their down payment's coming from. You know, this is who they are as people. Is this something that would tick all your boxes? And they're like, yeah, no, we can totally do something like that. So just that phone call and just that little bit of work ahead of time can be a game changer for a client, right? Because you can't have rate holds all over the place necessarily either, right? And so, you know, it's just protecting them, it's just slowing down so that we really fully understand the situation to make sure we don't run into situations like that.
Thanks. Yeah.
Yeah, that's a really good question, Hina, actually, to clarify that, because that is a huge distinction. Where is the work done? Because sure, they can throw out a rate all day long, but they may not qualify for that rate. And unless they've done the work to qualify for that. And so that's a key element to everything. And it happens all the time. There's mortgage people out there that will just throw rates around to try and get people to make sure that they call them or deal with them. And they're not a rate that these people would ever qualify for. Or by the time the people actually do something and actually give all the information, because now they're an active file, they're now finally doing it, they still got this rate in the back of their mind. Oh, I'm locked in. I talked to Bob from whatever, Blue Bank, and he said this rate. And then, okay. And he tells his realtor goes, yeah, you pre-approved. Yeah, I'm pre-approved. My bank told me that rate. Okay, awesome. Let's go. Let's look at 40 houses, finally make a decision on something, whittle away negotiations for a week and a half. We finally get it accepted. We submit it in and they're going, no, we can't approve that anymore. It's
time.
Right.
That's so misleading.
It is, but that's why we got to be really diligent on making sure we're doing our job and walking people through the process, right? And some people are hesitant because the process sucks. Like it's not fun going through a pre-approval. It's not fun. It is.
The thing is, if you're having a conversation with a potential client as a realtor and they think they're pre-approved, like, you know, as a realtor, like, are we supposed to question them? Like, who did you get the pre-approval? Was it a bank or was it a mortgage broker? Or like, you know, did you submit all your income or things like that? I know it could be a lot more, a better conversation. I mean, I'm just being really upfront right now, but
yeah,
you know, like,
super
how
good point.
do you question that when they think or believe they're locked in with a pre-approval?
That's awesome, Hina. Thank you for bringing that up, because that's the next point, right? Because now we're representing our seller and maybe we have multiple offers or maybe we just have one offer in, but we're going to tie up the property. It happens, right? You tie it up for 2 weeks. And are we tying it up with someone that is actually pre-approved, right? Right? Because that's part of the pitch from the realtor. Oh yeah, they're solid. They're all pre-approved. They're ready to go. And how many times have deals not gone after the realtor has said that? So, okay, so pre-approved. They've got all their stuff into the bank, like all their tax stuff, all they're in. They're locked down on a rate. They've got a pre-approval for a specific amount and we're in there. Yes, they've done all that work. Okay, great, awesome. Like that's an okay, there is nothing wrong with asking that as you're representing your seller. There is nothing wrong with that. That's you doing a good job for your seller, right?
And just to add to that too, like I totally agree with Kelly on that. And it's just having these conversations are gold, right? Because it's experience. So Kelly's experience and Nicole's experience and my experience on these, that it's like, no, we ran into that. And so then you explain to them why you're asking, right? I'm asking because, you know, we've had situations, or I've heard of situations where they thought they were, unless you've given all of your information, then this and this could happen. And we just want to make sure you're protected. And that's just doing the right thing for the client. So I hear you, because I used to feel the same way. and I'd be like that hesitant, like, I don't want to lose these clients or disappoint Kelly because, his clients go back and say, like, she wanted everything, including the kitchen sink. Like, no, I just wanted a rate, right? And so we always have to skirt around it too and be like, hey, I understand that you're wanting a rate, but I just want to do what's right for you and make sure that what we're doing is in your best interest. And in order to do that, we do have to ask these questions. And just also to comment, just because it pre-approval at a bank doesn't mean that it's not good. I was just using that as an example. Like, definitely people in the banks do the work as well. It's just, again, make sure we're asking that questions. And sometimes people come to us and they say, I already have a rate hold at the bank. Okay, perfect. Did you give them all the information? Like, did they give you something written as well? Was it just a rate throwing out there? Because again, it's people's perception of what they received, right?
Yes.
And we make sure that what they receive from us, I'm writing that summary, purchase price of your affordability. This is how much of a down payment you're going to need. This is what rate we've held for you. This is how much you need to sell your house for, because this is how much cash you're going to need, right? So I'm putting that on paper and I'm committing to that, subject to blah, 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 right? Whatever it is, finding the home and whatnot. That's, again, we can't get a formal approval until then. But that's why we want to make sure we ask those questions.
Yeah, absolutely. That's fantastic. This is great stuff, guys. Thank you for those questions. Real quick, anybody who came later on the Facebook Live, if you want to DM me, I will send this out to you. This is a document no one has seen. This is not in the course. This is not in the book. This isn't anywhere. This is something I created for another pillar in the course. It will be introduced into the course at some point, but right now it's not there. Just gonna take that out of there. You can get it. I'm happy to send it over to you. Just send me a DM with your email address and I'll send you that document. And it's all about the 4 pillars of finance and getting into that proper conversation with your clients so that you're able to properly pre-approve them. At least ask the right questions. You don't have to delve in. They don't have to fillet themselves wide open and give you everything, but at least you can get a feel for things. And it talks about how to ask those questions in the document too. Thank you so much, Lisa, for your time and spending some time with us. And I want to invite you to come every week and just be here with us and just, maybe hear what realtors are talking. You don't have to come every single time if you don't have time, but, and other real estate professionals too, that if you want to join us in our coaching sessions and offer some people that are complement the real estate industry, I invite you. So if you're watching this or if you're seeing this in another way, we're probably going to throw this on YouTube as well. People in the live, thank you for joining us today. So I'm glad you're here. And so, let's wrap it up. What are we at here? 11:03. Perfect. I'm sorry I started a little bit late. I got logged out of Zoom. I had to figure out my login credentials. It's so funny how you just get used to doing things. Anyway, I'm going to let you all go. Thanks for joining us, Onid. I appreciate you coming. And I always love new people joining us. So, and Tyler too. I think that was your first time too coming to be with us. So very cool. See you later, Heather. And did everybody get value out of that today?
Thank you so much.
Everybody got stuff out of that? Good. Awesome.
Thank you very much.
You're very welcome. Go out there, make a great day. We do this every Thursday between 10 and 11. All right. Talk soon.
Thank you.
Hey, thanks for listening. I hope you found some value that you can apply right away into your business. Can I assume that you want to be better than average? You want to be a successful realtorpreneur? Can I assume that being in the bottom 80% of agents fighting for 20% of the scraps is not good enough for you? What are your beliefs about successful real estate agents? Is it about spending a bunch of money on branding yourself so that all the people in your area, including the other agents in your area, think that you're really successful? Have you been told the more that you're willing to spend on self-promotion, the more successful that you're going to be? What about time output? Do you believe that you need to be working 12 hours a day to make a lot of money in real estate? Do you think that it takes a certain ability or personality type to make a lot of money in real estate? What about lots of listings? Do you believe that you need to have a lot of listings to make a lot of money? What about getting leads? Do you believe that you have to pay money for leads or door knock or cold call really well or be a phone master in order to get leads and in turn make a lot of money in real estate? What about social media? Do Do you believe that people who make a lot of money in real estate are great at social media and that's it? Listen, I'm here to tell you, no. These are all false beliefs. The first truth that you need to understand is that any person from any background can make a boatload of money in real estate. The only thing missing for real estate agents like yourself is a workable system infused with knowledge and understanding of every step. Would you like to know how to stir up business when you need it? I call it turn it on the tap. And over time, while building the business along the way to create a massive referral network so you never have to spend time and money to get more leads. That's what I call the dream business. And it took me 17 years of banging my head against the wall, applying all of those other strategies that everybody teaches, working 12 to 15 hours a day, spending tons of money on marketing, carrying 30 to 50 listings at a time, and then I figured it out, tested it with other people. And after that, I spent 3 years building a course to help people create their own dream business. I'm living it right now, and I'm not special. I just figured it out, and I broke it down into a workable plan. Do you want to know more? Go to forexformula.com, get the free training now, and just see if we're a good fit. That's forexformula.com. Click on free training. The number 4xformula.com.